Hello everyone, I'm Dr. Stock and this video is for entertainment purposes only. Today I want to talk to you about 3 stocks that I think are getting to be very interesting price-wise, not necessarily as low as they were at the big sell-off that we had on Monday. However, this video is being recorded ahead of the CPI data, so with that, if that comes out worse than expected, well over that 7% mark that we have, this is something that cause a further sell-off and create buying opportunities. So for me, I did dollar cost average on these on Monday, and I do have positions in each of these 3. These are things that these are stocks that I think are most definitely worth a look, especially at the future growth of each of these companies. With that said, let's get ready to rock. Welcome back. What can you do in order to support yourself through these times of trading and also support my channel as well? Well, there's a couple things that you can do. One is to use the referral links down in the description. There's Moomoo, Webull, which are trading platforms that you can sign up, deposit your money, you get free stocks. I get free stocks for the referrals, so it's a win-win, easy returns for both of us. And for each of those, the free stocks that you get, I mean, it's such easy, incredible money to make in that way. And if the random number generator's on your side, it can be a whole lot of returns. And even if it's not on your side, you still get some pretty incredible returns. And for this possibly sideways market that we have coming up, who doesn't want those easy returns? So moving on from there, also down in the description is a link to my Patreon. That way you can come over, see more of what I have to offer, and interact with me and my community over in the Discord that's over there. That link is also down in the description. And then finally, something that's nice and easy for you is go ahead and hit the like button if you like these videos, and also just hit me up down in the comments. I'd absolutely love to hear from you, and I always look forward to that interaction. Let's move on from there. So the first stock that I have for you is my friend DraftKings. And I say my friend, and we really are friends. I think that over time, the DraftKings is going to really surprise the markets, and I mean in a good way compared to how it has surprised the markets. So let's jump back to the weekly chart just for a moment. I did have the daily chart up here, but just to see the history that we had, this huge, enormous, big head and shoulders, followed by what we have right here with this little trailing off. It looks like almost a bearish flag formation that we have taking place. So could this drop further? Absolutely. The earnings, most likely they should be at the end of February when we see that come out. Let me go back to the daily chart so we can see more of the most recent price action. So there's that flag part that we were talking about. It looks like almost like a little bearish channel that we have taking place. Now with this price sell-off, take a look at the RSI starting to climb over time. We still are in bearish territory. However, if this continues, the price drop continues and the RSI continues to climb, what we could end up seeing is some bullish divergence that would cause this to finally reverse and give us back some of those gains. Now, what has caused the sell-off for DraftKings? Their revenues are expected to be over double year over year, so 100% year over year when we look at their earnings. Here, let me switch over to their financials. Switch this over to annual when we look at their income statements, and you can see for the fiscal year the year ended 12/31/20. My goodness. Maybe you can't see this. I don't know how big it is on your screen, but it is just over 600 million. That number is expected to be over 1.2 billion by the time that we close off Q4 of 2021. So when we get those earnings, if we do end up 100% year over year for the revenue, that's excellent. Now that does close off 2020 to 2021. When we compare what's estimated for 2022 to 2021, we're still expecting another 50% up in revenue gains. And so for DraftKings being a leader, that's absolutely incredible, and I think that they're in the right place that way. Now, there are some drawbacks. The drawbacks that we would have for DraftKings would be in their earnings per share. So when we look at the earnings per share that we have for DraftKings, they're way negative. More so, they're also trending in the wrong direction. The earnings per share are going down deeper into the negatives, and that's happening because of the operating costs. So becoming licensed throughout the states as there's more and more openings for online sports betting. Each state has their own license and has their own fee, and they just recently got licensed in New York. Well, that came along with another hefty price tag, and New York's supposed to be a fairly large market for them. Now, mind you, some of the market for New York will be taken from New Jersey. So basically people would cross the border from New York into New Jersey in order to be able to legally do the online sports betting. Well, now some of those people are expected to flow back into New York. So basically it's a wash between the two of them, that it does steal just a 15 to 25% is what's expected for New Jersey to have a dip because of what moves back into New York. Now that online sports betting is legal in New York. So that's something to be aware of. So will the operating costs continue like we have? It is possible right now. Online sports betting, huge market opportunity, and there's just a vicious competition to take that top spot, and DraftKings is a contender in that. So even if right now isn't necessarily the time because maybe the price is still just a little bit too expensive, and we don't have the evidence that that is going to end anytime soon, this is one that we do want to watch for when that inflection point changes. And I do have a position in this. I do dollar cost average over time, and for me, I was in, I am upside down in this, and that I am a bit of a bag holder, but it's one that I think is starting to give us some incredible opportunity, and it will return in multiples for the years to come. It might take a little bit of time, and that might be why we see the outflows that we do right now and why we see the depressed price that we do right now. But I believe that a time will come where that narrative changes. Taking a quick look at tip ranks, right now the average analyst estimate is $48. And so that's almost an 80% upside from where it's currently trading. The low estimate on this is $23, and right now it's mixed between buy and hold, and then there's one sell that also goes along with it. So when you look at this, it is mixed. It isn't the best thing that we would be looking for, and I think that there is a lot of risk that we have going along with DraftKings. They do need to get those operating costs under control, and they need to return to the shareholders by putting the right trend to the earnings per share. So that's something that we want to watch for their bottom line over time. Well, of course, we want to see that top line continue to grow. 50% per year over the next several years would be incredible, and that would really say a lot for how much of the market share that they're capturing, and then also returning it to the bottom line is the important part right now. We can see that they're top line growers. Can they return it to the bottom line? The next stock that I have for you is Matterport, ticker symbol T. My goodness, no, it's not. The ticker symbol is MTTR. And for Matterport, you can see this little excitement that we had, especially when Metaverse was announced and in joining a partnership with Meta, talking about Facebook using them for their spot in the metaverse with their 3D technologies to sort of bridge that gap between virtual and real worlds and break us out of these little rectangles that are our cell phones. So I believe that this is one that's going to grow a lot over time, and it's going to give us a lot of value on our money right now. You can see that we had a little head and shoulders pattern play out here, and I think that we're starting to see signs of a reversal. Now again, the video is being recorded ahead of CPI data. This is something that could easily turn around for us. But I think that if the price does drop from here, that it's giving us even more of an incredible opportunity. I was able to dollar cost average in some shares under $15 per share, which any more is just, to me, an incredible price, an incredible bargain for Matterport, because I think that's going to return at least double for this over the next 1 to 2 years. So let's look at what the analyst estimates have to say for Matterport. And for Matterport, over the next 12 months, a 90% upside, a price of $31.33, and the low price is $25. Even hitting that low analyst estimate that we have of $25, we still have incredible returns for us that I think that any investor would be pleased with as a guarantee over the next 12 months. So we're going to have to watch how this plays out for Matterport. We're going to have to watch, because they are a growth company, how inflation is going to treat that over time, because, well, growth could not be good for the next 3 to 6 months. But I do believe that after the inflation shakeout happens and these rate rises take place, and we know more of how the Fed is going to react to the markets, I think that by easily the summertime we start to see a change in the tune. So these, you have time to look at these stocks, do your research, do your due diligence, and decide how you feel about them and if they're ones that you want to invest in. And I hope that I brought some information to you, brought these to your attention at a time when you have that time to decide. Let's move on from there to the last one. The last one that I have for you is NIO, ticker symbol NIO. I nailed that one. So for NIO, you can see it's been quite a ride for the prices, and we still are elevated from we're still down from where we were at its peak at almost $67 per share. We're about halfway from where it was before, which was almost nothing. NIO has developed incredibly, and 2022 is supposed to be a really big year for NIO. So I think as we kind of work through the inflation and drama and fears and FUD and everything, whether it's the United States or worldwide, China itself, I don't believe that this one has a great risk of being delisted from the U.S. markets. Now, with that said, it could still definitely happen. China could change their mind. They could choose to go after NIO. Like I said, I just don't think that's going to happen. They have a lot of partnerships that are going to help their scalability and also to help their brand. And they're also releasing something of a lower model with a lower price tag that's going to appeal to a broader audience in China. Plus, they have expansion into Europe, and they plan, I think, by 2025 to expand into the United States. And so, with all of that expansion in mind, I think right now that NIO at around $30 per share is still trading at quite a discount. And if we look at what we have for the analyst estimates for NIO's rocking at about 110% right now, upside $63 per share by the end of 2022. And if they can expand as they say they're going to, if they can ramp up production the way that they say they're going to, and if they can continue to spread across the globe throughout China, I think that we're going to see that growth. I think that we're going to be very happy with our investment as we move forward from here. I have been taking this time while NIO has been under 30 and around $30 per share to dollar cost average and to lower my cost basis. And this is one that I think is going to go from in the red for me for right now. I think it's going to quickly flip into the green throughout the next year. And we might have to wait until the summertime to see that happen. Like I said, we need to just see what plays out on the macro scale of things, but then also on the more near-term side of things, that CPI data, that could tell us a different story. Hopefully it does come in lower. Maybe it comes in at expectation, which could already be priced into the markets. Maybe it comes in a little bit higher and shakes out the market a little bit more. But I do believe as we start to progress through 2022, especially end of Q1, possibly by the end of Q2, we start to see that inflection downward with the CPI data, with those inflation rates, and we start to get more normalized with that. And the Fed, with that normalization, which I think could be fairly rapid, means that the Fed would not have to respond as aggressively, which would be something that would allow for there to be a lot more liquidity in the markets. So that's what I have for you guys today. I hope that you liked this video. If you do, please click that like button. If you want some easy money, free returns, please check out those links that I put for you down in the description for Moomoo and Webull. You can sign up, deposit your money, and you get free stocks for the sign up and the deposit. And then I just get some in return for that referral. So thank you for supporting the channel, and thank yourselves for supporting yourselves. If you want to hear more of what I have to say and see more of what I have to offer, down in the description is that link to the Patreon. Go ahead and click it. The like button, like I said, always click that like button, and then comments, comment with whatever down in the description. Maybe there's another company that you like. Maybe there's something else I didn't mention about any one of these three companies in the descriptions that's down there. Do you see DraftKings growing from here? Do you see Matterport growing from here? Do you see NIO growing from here? If you do, awesome. What's your perspective on it? If you don't, if these are ones that you find too much of a risk, what is it that scares you about them? Anything at all, put it down in the comments, and I hope to see you over at the Patreon. Thank you guys for stopping by. These videos are incredible fun for me, and I can't wait to make more of them. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.